Good morning, students. Today, we will see the balance portion with regard to the final statement or final accounts of companies in the fundamentals of accounting, our open course. That is, we see in the previous classes how a trading account is to be prepared. How a trading account is to be prepared. That is, the opening stock is there, the purchases less returns is there, the sales less returns is there, the closing stock is there, and also direct expenses, wages, and carriage inwards, whatever be the direct expenses is there, that also to be incurred. So, in the debit side of the trading account, there is what is there? Opening stock is there, purchases less returns is there, then what is there else? Then direct expenses is there, and on the credit side there is what is there? Sales less returns and closing stock is there. So the usual entry for this is trading account debtor to opening stock to purchases to direct wage expenses to wages to carriage inwards etc. And the credit side is sales account debtor, then the closing stock account debtor to trading account, and we will adjust the value of the purchased items that is returned back and sales items that is returned back. If there is any profit, then trading account debtor to gross profit account, or if there is any loss, then gross profit or gross loss account debtor to trading account. That is the case maybe. So we are preparing the trading account and also we do some problems. Today we are going to discuss with the trading P&L account after the second part of the, so means we calculated the gross profit and then we are preparing the P&L account. So how it is to be, we will check it. So profit and loss account. It is an account prepared to find out the net profit earned or net loss incurred by a business during an accounting period. So we already calculated the gross profit in the previous classes. So from the gross profit, we are calculating the net profit earned or net loss incurred by a business during an accounting period. It is debited with all operating expenses and losses and credited with the incomes and profits. So all the operating expenses and losses to be debited and credited with all the incomes and gains or profits. Okay, so need. The purpose and importance of preparing the profit and loss account is to know the first main reason behind the preparation of profit and loss account is in order to know the profit, which profit, net profit or net loss, total profit. അതിലുള്ള ആ ഒരു കമ്പനിയുടെ നെറ്റ് ആയിട്ടുള്ള അറ്റാദായം എന്നാണ് മലയാളത്തിൽ പറയുന്നത്. സോ ടു നോ ദി നെറ്റ് പ്രോഫിറ്റ് ഓർ ലോസ് ഓഫ് ദ ബിസിനസ്, ടു കമ്പയർ ദി ആക്ച്വൽ പെർഫോമൻസ് ഓഫ് ദ ബിസിനസ് വിത്ത് ദി desired one. So to compare the actual performance of the business with the desired one and to determine the future line of action, isn't it? ഭാവിയിലേക്കുള്ള ഏതെല്ലാം proceedings towards the future ends. Okay, that is to be determined based on the calculation of net profit or net loss, and also to calculate different ratios such as net profit ratio, which is the ratio of the net profits to sales, ratio of operating expenses to sales, etc. അങ്ങനെ പല ratios calculate ചെയ്യാനായിട്ടും ആണ് which one is to be utilized. This P&L account preparation is to be utilized. Then how it is to be prepared? Profit and loss account begins with the gross profit or the gross loss brought down from the trading account. If there is the gross profit, it would be the continuation of the trading account, that is the P&L account. Credit side is to be brought down. Okay, carried out, then brought down. And then if there is gross loss, it is to be on the debit side of the P&L account. So that is the first thing. അപ്പം അതിൻ്റെ ഒരു ഫോർമാറ്റ് പറയുകയാണെങ്കിൽ ഇങ്ങനെയാണ്. ഇതിനകത്ത് ബൈ ഗ്രോസ് പ്രോഫിറ്റ് ബ്രോട്ട് ഡൗൺ അല്ലെങ്കിൽ ടു ഗ്രോസ് ലോസ് ബ്രോട്ട് ഡൗൺ, as the case may be. If the gross profit is there, that is to be brought down on the credit side. If the gross loss is there, that is to be on the brought down on the debit side. Okay. Then profit and loss account begins with the gross profit or the gross loss brought down from the trading account. This account is debited with all the items of its revenue, expenses, and losses which are not taken in the trading account. Rather, those items, all items that relating to the revenue, expenses, and losses, and the revenue, incomes, and the gains to be credited. Revenue, expenses, and losses to be debited. If the total of the credit side of the profit and loss account is more than the total of the debit side, it indicates the net profit and vice versa. Means this side is high rather than the debit side, then there is not net profit. If this side means debit side is high when compared to the credit side, there is net loss occurs. If the total of the debit side exceeds the total of the credit side, difference is the net loss, and the amount of net profit or net loss is to be transferred to capital account at the time of preparing the balance sheet. Then closing entries are there. For transferring the items of expenses and losses, the entry is profit and loss account debtor to each item of expense or loss. അതായത് എന്തെങ്കിലും എക്സ്പെൻസ് അല്ലെങ്കിൽ നഷ്ടങ്ങൾ ഉണ്ടെങ്കിൽ ദാറ്റ് ഈസ് ടു ബി ഡെബിറ്റഡ് ആൻഡ് വരുമാനങ്ങളോ ലാഭങ്ങളോ ഉണ്ടെങ്കിൽ ക്രെഡിറ്റ് ചെയ്യും. അപ്പം പ്രോഫിറ്റ് ആൻഡ് ലോസ് അക്കൗണ്ട് എക്സ്പെൻസ് ആണെങ്കിൽ അല്ലെങ്കിൽ ലോസസ് ആണെങ്കിൽ P&L account debtor to various expense or losses account. Okay. Indirect expenses all to be debited. Indirect income all to be credited. In case there is any items of income, then and the incomes and gain, the entry will be yes, each item or various incomes or gains debtor to P&L account, that is coming on the credit side of the P&L account. Then if there is the profit, then P&L account debtor to capital account. Net profit transferred to capital account. And if there is net loss, yes, net loss transferred to capital account, that is to be debited and P&L account should be credited. The form of a P&L account is this. See, firstly, gross loss or gross profit, whatever be the case, that is to be brought out. Then indirect expenses like salary, rent, rates and taxes, printing and stationery, postage, advertising, insurance, audit fee, bank charges, telephone charges, legal charges, commission, carriage outwards, repairs and maintenance, bad debts, provision for bad debts, discount allowed, provision for discount, depreciation of the fixed asset, then interest on loan, interest on capital, any other expenses. So I told you before that, what is there? All the indirect expenses and losses to be debited and all the indirect incomes and the gains to be or profit to be credited. See, on the credit side, this is commission received, whatever be the received item, income is to be generated. Okay, that all to be credited. Commission received, discount received, rent received, interest, dividend, etc. Any other income, then the net loss, if any, that is to any other income, that is also to be credited. Then take the balancing of these two. If the debit side is exceeding the credit side, so if the credit side is exceeding the debit side, it is an indication of net profit and vice versa. Means if the debit side is more than the credit side, it's a case of net loss. So from the following information, we will prepare one problem. We will do one problem regarding this. Firstly, note the same as it is for the trading account, the form for the P&L account also. From the following information, prepare profit and loss account for the year ended 31st December 2002. Gross profit 82,000, salary 8,000, rent 4,000, then insurance 800, interest on loan 1,000, then advertising 300, commission received 2,000, interest received 500. Then what is there? Interest received 500, discount received 400, postage and telegram 600, repairs 300, depreciation 600, printing and stationery, loan charges even 400 and 300 respectively. So firstly, starting with what? Gross profit brought down. So P&L account, this is the amount column on both the sides. So by GP brought down, how much is the amount? It is 82,000. Then what is the expense items there? salary to be debited, to salaries, to or simply salaries. The usual way is what to and by need to be used. But nowadays they are in the business concern, they are not using all the indirect expenses to be debited. To rent, it is 4,000. Then to insurance, how much? 800. Then to interest on loan, how much? 1,000. Then advertising 300. To advertising is an expense 300. Then commission received. So income, commission received, how much? 2,000. Then interest received, how much? 500. Then discount received, how much? It is 400. Then postage and telegram, that is a expenditure item. Postage and telegram, it is 600. Then to repairs, how much? 300. To depreciation, it is 600. And to printing and stationery, how much? 400. And to loan charges, how much? It is 300. So these are the items to be debited as well as to be credited. So that they then take the total of both the sides. Both the sides in the sense means firstly we check that there is the credit side, then because maybe usually there is a gross profit, net profit. So 82 plus 2, 84, 84, 900 is the total. 84, 900. Then 2 net profit transferred to capital account. Sure, this side is less. So how much it is coming? 68, 600. That is the, take the total of this and then deduct from credit side total. So it is 68, how much? 600. This is, what is that? This is the P&L account. Then always the asking what both the things need to do it at the same time. Means prepare trading and profit and loss account for the year ended so and so. അങ്ങനെയാണ് ചോദിക്കുന്നത്. അപ്പൊ ആ രീതിയിലുള്ള പ്രോബ്ലംസ് നമുക്ക് നോക്കാം. So firstly, trading account need to be prepared and keep it in mind that what are the items with regard to the trading account, all the direct expenses and direct income to be coming where in the trading account. All the indirect expenses and indirect income to be coming in the P&L account. So firstly, trading account, trading and P&L account. Okay. This is the total debits column. This is the total credit column. First thing, what is there? To opening stock. That is the first item where in the trading account, 8,000. Then rent and tax rates coming in the P&L account. Trade expenses that coming in where? Trading expenses. This is the direct expense, isn't it? So no, indirect expense, that one. Okay. Then here trade expense, then sales less returns. How much it is? Sales returns is 600 and sales is 82,000. So by sales 82,000 inner column less returns, how much? 600. So it is 81,400. Isn't it? Then to purchasers 50,000 less returns. How much purchases? Purchase returns is how much? 300, isn't it? So 300 need to be there. Excuse me. So purchase returns What is that? 50,000 minus 3,000, so 49,700, isn't it? Then wage carriage inwards, that is also a direct expense item. Carriage inwards, it is 200. To wages, how much it is? 500. I think this also, the closing stock is there. Where closing stock is valued at that. So by closing stock, the rest all the items where it is coming, the rest all the items coming in the P&L account. Okay, that is all the indirect expenses and the indirect incomes. So 1,000 is the closing stock. So total is how much? 81,000. So 82,400. Isn't it? 82,400. So 49,700 plus 8,000 plus 700. So it is after that 24,000 is what? The net profit. So gross profit. Gross profit carried down. 82,400. That is to be brought down. Sorry, 24,000. Okay. Then what are the next items here? The indirect expenses. To salaries. How much it is? 2,000. Then after that, here there are some items, isn't it? Rent and rates, trade expenses, that too need to take it here. To rent and rates, 300. To trade expenses, how much? 600. Isn't it? Then after that, the rest all items here. Wages is there. Then to discount allowed. Discount allowed is 40. By discount received is 50 lakh. Then commission paid. So continuation of the P&L because board size is not there. So to commission, that is in the debit side, if a commission is coming, it is known as what? Commission paid. Then to legal charges, how much? 50, because salary we taken already. To audit fee, how much? 60. Then to bank charges, all the indirect expenses coming on the debit side. Bank charges is 40. Then to repairs, 260. Then to postage, 50. These are the debit items, expenses items, and there is credit item. What is there? Interest on investment. By interest on investment, how much it is? 260. So then take the total of this. So 24,050 plus 260. It is 24,310. Yes, 24,310 is the total. And here 2,300, 2,940, then 2,950, then 3,000, 3,060, 3,100, 3,150 plus 260. So anyway, the net profit is how much? NP transferred to capital account. So the credit side is more, debit side is less. So there should be, what is that? Net profit. That is to be transferred to capital account. How much? That is 2,900. At the time of preparing the balance sheet, we are putting this 2,900 need to add with the capital. So in this way, we are preparing what? The trading P&L account. So clear? This is the profit and loss account. We will do one more problem and we'll wind up the session. See, this is the problem. Prepare a trading and profit and loss account for the year ending 31st December 2014 from the following information. Stock on 1st January 2014, 7,000, purchases 23,000, sales 40,000, purchase returns 3,000, carriage on purchases 1,500, carriage on sales it is 500, salaries 3,200, productive wages 3,100, rent, rates and insurance 1,400, commission received 700, advertisement 800, audit fee 300, and stock of goods on 31st December 2014 it is 12,500. So we are going to prepare the trading and P&L account at the same time. Okay, so this is firstly starting with the trading account and then the continuation as P&L account. So firstly, to opening stock, that is the first item 7,000. Okay, then purchases 23,000, sales 40,000, purchase returns 3,000, sales returns 2,000. So two purchases, how much? 23,000 in the inner column, less returns, how much? 3,000. So net amount 20,000 on the debit side. Then by sales, how much it is? 40,000 inner column, less returns, how much it is? 2,000. So 38,000 outer column. Okay, 38,000. Then carriage on purchases 1,500. Carriage on sales 500. So carriage inwards and carriage outwards. Okay. So carriage on purchases, how much? 2 carriage on purchases. Okay, that is 1,500. Then next item, anything coming in here by closing stock. By closing stock, it is 12,500. Okay, we will take it the what is that? Gross profit. So one more item, to productive wages. How much it is? 3,100. Then take the total of this. 7,000 plus 21,500 plus 3,100, 31,600 on the debit side, and then credit side it is 38,000 plus 12,500, 50,500 on the credit side. So 5,500 minus 3,100 minus 21,500 minus 7,000, 18,900. See the answer, 18,900. To gross profit brought down, sorry, carried down, 18,900. That gross profit to be brought down here. By gross profit brought down 18,900. Then we need to put the expenditure. Expenditure means indirect expenditure. So what all items rest is there? Sales, purchase returns, carriage on purchases, carriage on sales is there, salaries is there, then rent, rates and insurance. So to salaries, how much? 3,200. Then to rent, rates and insurance, 1,400. So here, what is there is commission received is 700. Then advertisement, indirect expense, advertisement 800. Then audit fee 300. And one more item is there, carried on sales is there, that we will check it. Stock is already taken. So how it is to be 18,900 plus 700 plus 500